Good morning. Welcome to Stock Market Today. It's Friday, January 31st, 2020, last day of the month. This is Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at Dan Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for that free email. A lot of the content for this show comes out of there, as well as daily stock ideas for you to consider to hit your inbox every trading day before the market opens. So U.S. equities closed higher on Thursday, reversing earlier losses. Financials, consumer staples, and utilities led. Comm services and healthcare lagged. Treasuries were stronger across the curve, but well off the low yields of the day. The dollar was weaker on the major crosses. Gold was up 80 basis points, and WTI crude closed down 2.2%. So another beating for crude, but it did close off the worst levels of the day. As we get to the desk this morning, futures are down about 50 basis points, and U.S. equities are on track for another down week. Asian markets were mixed overnight. Japan was stronger, up nearly 1%, while Hong Kong and South Korea extended their losses. Mainland China remains closed for the Lunar New Year holiday, set to reopen on Monday. European markets are lower. Treasuries are unchanged. Dollar weaker on the yen cross, slightly stronger on the euro. Gold down 20 bips, and WTI crude mustering a meager rally of 20 basis points to get us going this morning. And I wish there was something different to say today, but there really isn't, right? The same bullet points as they were yesterday apply today. We're testing the support zone after fading from the highs. And it was a good test yesterday. We pushed into the support zone and then had a big rally. Take a look at the candlestick chart on the S&P 500. Big open white candle there. Now futures are slightly lower today, so we're not seeing this type of upside follow through that we would like. Near-term support remains in the 3,200 to 3,250 range. Resistance 3,300 to 3,330. RSI, remember what we were talking about. We want to see support hold with RSI holding above 40, ideally above 50, but above 40, we'll say we're still in bullish ranges. Chaikin money flow is bullish. So I think that I think this is a good opportunity to be putting together watch lists, searching for names that fit your process. And as long as the market holds support here and the RSI holds bullish ranges, I think you can start to look to put some capital to work. And as always, manage your risk, though, because we don't know what the next headline might be. Let's turn to our market in a minute. What are we writing about today? Well, the big reversal from the lows to close higher on the day. Investors favoring growth as global growth fears increase, while also seeking safe havens across asset classes. Very similar to what we saw through the first half of 2019, actually. Lower rates helping home construction stocks. We're asking the question. We'll take a look a little bit later in the show. And as I said, futures do point to a lower open here today. Taking a look at the major indices from a power bar perspective. Dow adds 44 basis points, 8 to 5 bulls to bears. No real change there. S&P 500 up 30 bips, 133 to 85 bulls to bears. NASDAQ inline performer, 32 to 10 bulls to bears. Here's your small caps. Notice how small caps, notice the difference. Notice what's happening, right? Remember when small caps were starting to outperform? It coincided with rates moving higher. Now rates are moving lower again and small caps are lagging. Do the intermarket work, folks. It's important. Small caps actually down on the day. 1 basis point, but still down, and underperforming the S&P 500. And notice that the power bar is starting to deteriorate. 507 to 288 bulls to bears. Bonds uptick slightly, sending yields lower. Financials actually had a strong day yesterday despite lower yields. 25 to 3 bulls to bears on the financials, but the relative strength is just no longer there. If you're looking at XLF, relative strength no longer there. Underperforming. Yields have gone down. Everybody rotated out. People seem to be rotating out of the financials and into the bond proxies as rates have gone lower. Do the intermarket work. What happens in other asset classes impacts equities. I realize most people are focused on equities, but you have to be paying attention to what's going on in other asset classes. Let's hit our stock of the day. Meridian Bioscience, Vivo, VIVO, the ticker symbol there, healthcare and equipment company, 1010, down 3.44% yesterday, has a very bullish Chaikin power gauge rating due to very attractive financial metrics and very strong price volume activity. Stock does have weak earnings performance, however, but when we roll up the 20 factors, 5 in each of these 4 categories, I forgot to turn my pointer on, we come out with our very bullish rating. Strong trend, strong industry group. What do we see here? We see what we refer to as a personality change. Rating turned bullish back in late November. Stock was still underperforming, but notice how the intensity of underperformance is lessening to the point now we're actually beginning to be a slight outperformer. This looks interesting to me. I would love to see some better money flow, but we have an oversold stock that's going through a potential personality change, very bullish rating, above the trend line. I think that if you were looking for an idea, a turnaround type situation, a name that I like to say could be turning the corner, this would be an area to look. I think you need to really manage your risk, right? Whatever that process is for you, whether you use ATR stops, whether you use a set percentage, whether you use moving averages, whatever it is. I think because this is early, it's a little higher risk. So you want to make sure you stick to your risk management process. But this is a compelling looking name to me, this Vivo, Meridian Bioscience. Take a look at it as a potential idea for those of you who like to play the turnarounds. Looking at our sector tracker now, the movement of the major sectors over the last 5 days. And this is what I'm talking about when I say it looks very similar to the first half of 2019. Through the first month, of the year, 1 month performance, your leading in sectors are utilities, tech, REITs, staples, and comms. So some growth and some defense. Over the past 5 days, tech is positive, barely, but positive, and utilities are very positive. Growth, defense. Look what's at the top of the list. Staples as well. Real estate in the top 4. Growth and defense, right? Slowing growth world, investors are paying a premium for growth. That's your tech play. Falling rates, though, concerns your bond proxies and your safety. Stay away from energy. Continue to stay away from energy. Healthcare is going to be volatile. I continue to like healthcare from our trend work and from our Chaikin Power Gauge model. But I recognize the fact that as we move closer to the election, swings on the Democratic side between who's leading and who's doing well, and we got an important week next week, are going to cause volatility within the healthcare space. So just it is what it is this year. You have to be aware of that. Manage risk. Would love to see comm services get back in gear now. Facebook weighed on that group yesterday. Let's look at our industry and focus. Biotech services, which over the past 6 months has underperformed the S&P 500 by 3.26%. Its power bar ratio, which looks at future potential, is very weak. 31 bearish or very bearish stocks, 9 bullish or very bullish stocks. It's currently ranked number 19 of 21 subsectors, and it's moved down 1 slot over the past week. So names there where we definitely want to avoid: Mirati, MRTX, Intercept, ICPT, and Bluebird Bio, BLUE, all have very bearish Chaikin Power Gauge ratings. But let's recognize something here. Biotech is nuanced, right? You don't want to just go out and be short these stocks without doing a lot of work on what their pipeline looks like and what the potential catalysts are. Same as you don't want to go out and you don't want to go out and just nakedly be long or blindly be long these 9 stocks either. Biotech requires an extra measure of diligence in the marketplace. I always tell somebody, if you're going to buy individual biotech names, you better know what their calendar looks like for the next year. What are the potential catalysts that could move a stock 30, 40, 50% in a day? Right? FDA announcements, product launches, right? Phase 1, 2, 3 test results. All. You need to be aware of it all if you're going to trade individual biotechs. Taking a look at the group, XBI, neutral ETF power gauge rating, strong trend above the trend line, which is being tested here. What I see is kind of a breakout and a retest. Oversold, inline performer, neutral rating, bearish money flow. Doesn't get me excited as an ETF, right? If I was looking to trade just broad exposure, right? Instead of picking the individual names. Sometimes I think with groups like biotech, if you don't have the resources to actually drill down on the individual names and really have an understanding of them, especially the smaller biotechs, where it's very much techie and science, right? A lot of people who work at hedge funds and mutual funds who analyze the biotech industry are actually doctors, right? They have a medical background. They practice medicine and then decided to come to Wall Street. If you don't have that kind of background, maybe it makes sense to just own a broad-based ETF such as this. But it's just not that compelling to me right now. Let's look at what's trending. Yesterday's S&P 500 movers and shakers are gainers and losers. And for the most part, not for the most part, every single one of these is earnings related. Yesterday and today are busy days for earnings. Mondelez, MDLZ up 7.75% following their earnings announcement. FBHS, Fortune Brands, 5.58% on their print. Ben, it's Franklin Resources. It's a money manager, speaking of. 5.5%. CTVA up 5.2. Archer Daniels, ADM. This is actually benefiting, starting to make some positive commentary about the trade deal getting done. ADM very much levered to the ag space. Their earnings were good. Their outlook was good. Investors took the stock up 4.85% on the day. DD DuPont down 8.62% following their print. URI down 7%. UPS, one of the important logistics companies, down 6.7%. Alexion, speaking of biotech, down 6.2%. And Facebook, as I said, Facebook weighed on that comm services group yesterday. Facebook down 6.14% on the day following their earnings announcement. Let's dive into the charts now. You hear me talk about it all the time. In a slow growth world, investors are likely to favor growth, right? And this is a great look. IUSG, the iShares Core US Growth ETF, it's in a steady uptrend, right? And it's been in an uptrend above this trend line, above the 200-day moving average. RSI shifted into bullish ranges. Notice the pullback holds above 50 after becoming overbought. But this is what I was talking about, right? Throughout most of last year, we were concerned about global growth, and growth outperformed value until about September, right? When things started to look better as it related to the trade and tariff issues, people thought that that would lead to a pickup in growth. And it may very well. So growth started to lag the broader market. But now, with the onset of coronavirus, fears about global growth slowing, coming back into investors' minds, and now growth is outperforming value. In a slow growth environment, doesn't it make sense that you'd want to pay a premium for the areas of the market that are growing? Look at the big stocks out there. FanMag, Facebook, Amazon, Netflix, Microsoft, Apple, Google. That's your leadership. Your large cap, mega cap growth has been your leadership. And that's leading to this growth outperformance on a relative basis because investors are looking to pay a premium for growth in a slow growth world, but they want to do it in the bigger names because those are perceived as safer. That's my take, right? Why look at small caps underperforming? Mega caps and growth are where the outperformance lies. And as rates have come in, home construction has picked up. ITB, the iShares US Home Construction ETF. We rate it with a very bullish ETF power gauge rating. 26 bullish or very bullish stocks for only 4, count them 4, bearish or very bearish stocks as holdings of ITB. Here again, nice steady uptrend, consolidation and breakout above the 200-day moving average, confirmed by momentum. Look, we haven't been oversold. This fund has not been oversold in more than a year. We have a full-blown shift into bullish ranges, became overbought. Look at the outperformance relative to the SPY. Breakout, retest, moving higher once again. Notice when it started to move higher. Look at the dynamics here. Again, remember what I said? Pay attention to what's going on in other asset classes. Home construction started to lag as rates started to move higher. And now rates have moved lower again. Home construction outperforming. And we think that that outperformance is likely to persist because our ETF rating is very bullish. And because there are 26 bullish stocks and only 4 bearish stocks, right? So there it is. Cross asset class analysis, intermarket analysis, leading to an outperforming area of the market, right? Top down, leading to the idea that I'm featuring in my note for Chaikin Analytics clients today, which is Builder's First Source, BLDR. It's a holding of ITB. It has a very bullish Chaikin Power Gauge rating. It's above the 50-day moving average, above the 200-day moving average. The RSI is in bullish ranges, and it's been a steady outperformer relative to SPY. This is the stock that I'm featuring in my note today. Every day I feature a stock, either bullish or bearish. This is the stock that I'm featuring in my note today for Chaikin Analytics clients. And if you're interested in seeing that for 2 weeks, head over to chaikinanalytics.com/test drive. Sign up for a free 14-day trial. You'll get my note every trading day, as well as Mark Chaikin's note every Sunday with ideas for you to consider and our thoughts on the market. I hope that you all have a great weekend. I will be back here on Monday. Have a great weekend, everyone.